Morning, everyone. Thanks for joining our 11 a.m. morning call this week. For stock counters update, we have our S-REITs ETF and Crowmwell's initiation. Alongside, we also have a Phillip on the ground for Mermaid. And after that, we'll have our technicals by Zane and ending it off with our usual SG Weekly. So with that, I'd like to pass on to Helena to share on S-REITs ETF. Thank you.
Thank you, Sean. So I'll be sharing on the S-REIT ETF. So I'm happy to announce that since today onwards, other than our normal stock coverage, we're also going to be initiating coverage on ETF. So similar as stock, we're going to be giving a recommendation along with the target price. So the first ETF that we start initiation is Lion-Phillip S-REIT ETF. So the report actually was just published this morning. So a little bit background about the ETF. This ETF provides investors with exposure to a very diversified portfolio of REITs listed in Singapore. It replicates closely the performance of the Morningstar Singapore Rate Yield Focus Index. The ETF was established in 2017. It currently has 22 securities with a market cap of 347 million Singapore dollar, which in terms of market cap is considered the second largest in Singapore. Do note that currently the REIT ETF listed on SGX, this is the only ETF that focuses solely on Singapore securities. Moving on to investment merits. So investors can gain the opportunity to participate in the potential income and capital appreciation generated by the Singapore REIT market, offering a very convenient, efficient way to assess this segment of the real estate sector. The second is sustainable income over the years. You can see the figure on the right. That's the DPU since ETF's establishment in 2017. So you can see that the dividend has been increasing with an annual dividend of 1.80 cent at IPO to now 5.07 cent. Last but not least, book value of the ETF have becoming more attractive over the last year. Moving on to outlook, we expect dividends from REITs to remain under pressure from higher interest rate. Due to interest rate hedges, effective interest rate will still creep up until 2025. But in contrast, property valuation in Singapore has been stable, supported by transaction prices. So interest rate cuts can provide REITs the triple benefit of a yield more attractive to bonds, lower interest expenses, and increased valuation as cap rate compresses. Next slide, please. I would like to explain briefly how we do our valuation since it's our first ETF coverage. And I do believe there's not so much ETF valuation in the market as well. So we'll be using two different valuation methods. One is we use the dividend yield spread. The other is we use the price to book ratio. So for the dividend yield spread, we'll be using the spread to 10-year bond, while for the price to book ratio, we'll be calculating the price to book using the weighted average, the price to book ratio of all the individual components. So for both valuation method, we'll be using 3-year average value. We think it is appropriate to account for the recent rise in interest rate. So in the end, we will use sensitive analysis as shown in the table to apply 5% and 10% discount and premium to come up with a range of our valuation. So as you can tell from the table, from the first method, we can see a target price of 0.85 Singapore dollars, while for the second valuation method, we have a target price of 0.97 Singaporean dollars. So we use a 50-50 weightage. So in the end, we come up with our target price of 0.91 Singapore dollar. So with that, we initiate an accumulate recommendation. That is all from me. Now I'll pass my time to my colleague, Darren.
Yeah, thanks, Helena. Yeah, so we initiated Crowmwell European REIT with a title Asset Rejuvenation to drive organic growth. So just some highlights on, or rather some background on what Crowmwell European REIT is. So Crowmwell European REIT is a Europe-focused SGX-listed REIT. So its mandate is to invest primarily in light industrial or logistic assets and office assets. So right now the split for them is 53% light industrial or logistics and 45% office. So their portfolio is 2.3 billion euros worth, and it comprises 110 properties. So most of these properties are freehold and they are close to gateway cities. So you can take a look at the chart on the right and the PISA. So the PISA shows that Netherlands accounts for 27% of the of the portfolio, and France is 20%. Then if you take a look at the breakdown between like industrial and logistics and office, so the biggest weightage here is Netherlands office properties, and second is France's light industrial and logistic assets. Yeah, so the sponsor for Crowmwell is ASX listed Crowmwell Property Group. So that Crowmwell Property Group is a real estate investor, and it has an AUM of about 11.4 billion Aussie dollars, and they have assets in 14 countries and 3 continents. So the sponsor, Crowmwell Property Group, it owns a 28% stake in Crowmwell European REIT. Yeah, next slide, please. Yeah, so next, going into the top 10 assets. So the top 10 assets of Crowmwell Property Group, of Crowmwell European REIT, even though they have 110 assets, the top 10 assets account for 38.5% of AUM, and 6 of them are from the Netherlands, and 5 of them are office assets in the Netherlands. So you get in the graph, or rather that picture there, you can take a look at some of the top 10 assets. And on the right hand side, there's the top 10 tenants of Crowmwell European REIT. And right now, the top 10 tenant accounts for 23.2% of AUM. It used to be 28.5% a year ago. So right now, they've reduced their tenant concentration risk. And in the pizza at the bottom, so you can see that that's the tenant, the sector breakdown of what the tenants, of which sector, industrial sector the tenants are in. So you can see transportation storage is the largest at 17%, followed by wholesale, retail, and financial insurance. Yeah, next slide, please. Yeah, so for investment merits, we have 3 major ones. So the first one is Crowmwell European Group REIT has a resilient portfolio with high occupancy and rent reversions. So for the latest FY, or rather as of December 23, or rather December 2023, Crowmwell European REIT had a 94.3% portfolio occupancy. And for the rental reversions, it came in at about 5.7% for the full year. So the office sector, the rental reversions was slightly higher, about 7%, and the logistics sector about 3%. So we expect the occupancy rate to remain stable around we expect the occupancy rate to remain stable around current levels around 95%, especially since there's only a 13.5% of the leases that are due for renewal this year. Yeah, so for the second investment merit is that they have divestment plans in place. So in 2022, they announced a 400 million euro divestment plan. So right now, since then, they have already divested 237 million euros, and they divested it at a premium of 14.6% to the most recent valuation. And based on that, based on the 400 million divestment target, they still have another 170 million euros of assets that are remaining that are put up for sale. And these 170 million euro assets, most of it are from the weaker Polish and Finnish office assets. Yeah, so the proceeds from this sale, rather any successful divestments, the proceeds from that will be used first to pay off debt. That's the top priority, and then the next priority is to fund a capex. So they have some assets, some trophy assets that they have earmarked for redevelopment or extensive refurbishment. So I'll get on to that on the next slide. Yeah, so for the last investment merit that we have, the major one is that all their leases, they have CPI indexed rental escalation. So they are tagged to some form of inflation index. Most of it are based on 100% of the year-on-year increase in CPI, with the exception of Italy, where it's 75%. So the chart on the right is the breakdown of the rental escalations based on the rental indexation for all of C-REIT's country of operations. So there are 10 there, and yeah, it's quite detailed. So if you have time, you can just take a look. Yeah, I won't go through that because it's quite detailed. But basically, it's the difference in the year-on-year increase in CPI. Yeah, next slide, please. Yeah, so next, C-REIT, they have a target 60-40 asset class split between the light industrial logistics and well-located grade A office assets in the long term. So what that means is that their portfolio previously has some office grade B and C assets, which are not doing too good and probably will not recover at all. And there's some logistics that are up for development as well. So you can see in the chart, this is the picture is of FY22. So as of FY23, 53% are already in light industrial logistics, and 45% is in grade A of not grade A, is in office. So that their goal is to move the exposure to only grade A office. And so they have some assets in the development pipeline, like Hexiport, Maxima, like the three on the right. So those are going to go through extensive refurbishment or redevelopment to become a premium grade A green certified buildings. So the pivot to 60% light industrial or logistics is mainly due to capture on the growth of the e-commerce growth, as well as nearshoring. And rather the grade A office 40% that they're intending to have is to capture the growth, or rather to capture the demand that a lot of occupiers have, where they want premium, top quality, green certified buildings. Yeah, so that is how they capture growth going forward. And how they get there is also partially to divest the grade B and C offices as well, like the pollution finish assets, like I mentioned in the previous slide. Yep. So next slide, please. Yeah. So next is Crowmwell's debt maturity profile. So this is the whole chart and the whole debt profile. So as you can see in FY22, rather this year, they do not have any debt expiring at all, and they already have 88% debt that are hedged to fixed rates. And then the next debt expiring is in FY25, which is next year, which is around November. So that is it's actually the 450 million euros that you see here is actually a 500 million euro bond that was issued in 2022, and it's due in November 2025. So last year in December, they paid off 50 million of this 500 million. So the remaining is only 450 million. And when they paid off, they managed to book in a capital gain of 3.1 million euros, mainly because this bond is 2.125%. So as you know, interest rates rose, and as a result, the bond price fell, and they managed to book some capital gain when they bought the bonds back at below par. Yeah, so the top priority for Crowmwell European REIT is definitely to refinance this bond. But the good thing that we see here is that they still have ample time to do so. Like the whole of FY22 as well as the first 3 quarters of FY25 to do so. So that's effectively 7 quarters for them to refinance. And they have also this divestment pipeline that they have, and they can use some of the proceeds to pay off this bond in the meantime to lower their interest costs going forward. So that's a near-term debt profile for Crowmwell. Next slide. Yeah, so these are our revenue and DPU projections. Yeah, so in FY23, their revenue fell mainly because of the fact that they divested 3 rather big assets for a value of almost 170 million. Yeah, if I remember correctly. Yeah, so it's 3 big assets like Piazza, etc. So all these assets were divested in the middle of 2023. So the loss of income from those assets and as partially offset by some rental escalations and rental reversions resulted in a decline of revenue by that amount that you see there is about 6 million euros. And so for FY24, we forecast the fact that the loss of income, the full year loss of income for these 3 big assets, as well as but we offset it with some of the positive rental reversions and rental escalations, and as a result, we get a lower revenue for FY24 as well, and we expect FY25 revenue to increase mainly because of some of the redevelopments completing and going back to contributing full. So there are some redevelopments that they have that are completed recently, or rather just completed, like Nevesa. So this will start to slowly contribute. And as a result of the lower MPI and revenue, DPU is expected to fall as well. So that's our projection there, and only to recover in DPU is expected to recover in FY25 when interest rates pressure ease. So we are expecting the cost of debt to remain relatively stable as the interest rates in Europe have already kind of peaked as well, and expected to decline this year, probably in June. Yeah, next slide, please. Yeah, so for some of the risk, for the valuations, Crowmwell, their valuations, it dropped by about 4.5% for 18 months. So and that's despite the rising interest rates and cap rate expansion. So going forward, we do not expect a further material change in asset valuations for their properties, as interest rates have peaked and cap rates are likely to remain stable or even compressed going forward. And they're also affected by country risk. They are exposed to political and policy changes in EU, and any economic downturn in Europe is expected to affect tenant demand and rental rates. And they're also affected by foreign exchange risk, because income from Denmark, Poland, and Czech Republic and UK, they are received in their respective currencies and not in euro. So Crowmwell, they pay dividends in euro, or rather their base currency is in euro. So yeah, the other 6 currencies, their income is received in euro as well. So they do not have FX risk for the 6 countries. But for these 4, they are affected by FX risk. And Crowmwell, they do not hedge income. So that's why, yeah, they're impacted. And these 6 countries account for about 20% of MPI. Yeah, next slide, please. Yeah, so this is for our valuations. So for Crowmwell, we initiate coverage with a buy recommendation with a target price of 1.91 euros. And our target price is a 10% forward dividend yield for using our FY24 estimated DPU. And based on the current price, it's 10%. And right now, Crowmwell is trading at about 0.65 times price to NAV. So that is below the S-REIT's index of about 0.87 times. And it's trading at about minus, or rather 1.3 standard deviations below the average price to NAV that Crowmwell has been trading since they listed back in 2017. Yeah, so to arrive at our target price of €1.91, we used the cost of equity of 10.2% and a 2% terminal growth rate. Yeah, so that's all for me and Crowmwell. I have the time to Zane to do some technicals. Thanks.
Hi, Derek. It's okay. I'll take
Oh.
over.
Oh yeah, sorry. Yeah.
Mermaid.
Okay.
Yeah, just a short one for me. This is a feeling on the ground because Mermaid had an analyst briefing last week. We don't have coverage, but just some highlights on the company. It's a market cap of 150 million. The company provides subsea services. Main customer is Subsea 7, the big undersea offshore services company. And they provide subsea services to oil and gas majors. So you think about the Chevron. These are the end customers, and who have offshore operating equipment, meaning things like the big vessels that operate in the deep sea, and also the offshore installation. So what Mermaid does is we call it IRM, stands for installation, repair, maintenance, and survey of these offshore structure. They also do a lot of cable laying and engineering work. And in recent years, this segment called decommissioning is becoming more and more in a bigger contribution in terms of value and orders. So Mermaid has six vessels which they own 100%, and one they have a 50% stake, and they also have a long-term charter in vessels. So total 7 vessels, but one is ready to be sold because it's not operating optimally. In terms of remote control vehicles, they have 14 all in, with 3 of these own 50%. And they have about 1,000 divers under employment. Okay. The company turned around in FY23 after 5 years of losses. If you recall, for those who were in the market and from FY11 to FY14, those were the good years for the oil and gas sector, offshore marine sector. So during that time when crude prices were high, and Mermaid at that time was also involved in offshore drilling. Yeah. But when offshore drilling activities could not become profitable after oil price collapse post 2014. And on top of that, the offshore drilling obviously is more expensive than onshore. And also during that time, US became much bigger in terms of as being a crude product producers. They're now the biggest in the world with their shale gas activities. So with that, 2024 they divested the offshore drilling activities, wrote off a big amount of their balance sheet, but they never really fully recovered over the following 5 years. Just like the biggest competitor, Sapura Energy, which is listed in Malaysia. But Mermaid managed to turn around in FY23. A few reasons. One is the vessel utilizations has been climbing. Now for 23 is above 60%, and that is driven mainly by higher crude prices. And there's also a new segment called decommissioning activities, which is driving demand for their services, subsea services. So decommissioning means an abandoned oil field or oil field that has already reached its end of life, and then under the contract with the local government, they have to decommission and pull out all the jackets from the sea. So that's decommissioning work. But as you can also imagine, decommissioning work does not bring in additional revenue to the oil majors. It's just an obligation that they have to meet. So when oil prices were not as high, there's less motivation for them to do this work. So the motivation has to come from the government mandates, and also when oil prices are good, the activists start to come in and pressure these oil majors. Then this kind of work are set in bigger motion. So that if I can refer you to the order book in the bottom chart, the total order book of 734 million. This is a record level, and of this, majority is taken up by decommissioning work. So where these works are mainly in the Asia Pacific and Southeast Asia, and as Chevron is a big customers, and Chevron is very committed to do this type of decommissioning activities, and they have abandoned the oil field in Thailand. There are also several marginal fields in Africa that will drive demand for decommissioning for the next 30 to 40 years. And of course, in the North Sea, it's the government mandated closures. So this is decommissioning will be the tailwind for them. But if you look at the net margins, it's about 3.5%. So there's a lot of room to improve on their productivity. So the sector outlook is possibly positive if oil price continue to hold up, as the OPEC is determined is still committed to their cutback in production output, even into second quarter this year. The other factors driving up the rates are the shortage of vessels. It's difficult, fairly difficult for them to get hold of vessels in the market for subsea work. Two reasons. One is the IMO's regulations on the use of green vessels has caused ship owners to hold back on their decision to invest in new vessels. And also this new type of fuel requires a higher cost. The typical vessels that Mermaid will need will cost about $160 million per vessel. So unless Mermaid can see a contract that, so for 10 years, like maybe 7+3 type of contracts. Otherwise, investing in these new vessels doesn't bring in the returns that they require. And these vessels, charter rates and now day rates has now gone up to 170 to 180 US dollar per day. So it's also make it more expensive for them to charter in. And therefore, they need to find some ways to pass it on the higher cost to their customers. The other thing about Mermaid is the balance sheet, right? It's now 170 million net assets. Also, is and we see it's a limitation for them to grow. So these are the two limitations that we see for Mermaid. Okay, that's all for me for Mermaid. I pass on to Zane. Thank you.
Thanks, Peggy. Good morning, everyone. So I'll move on to technicals. First up, looking at the S&P 500 last week, we saw a new all-time high closing on Thursday. So for this week, I think we are likely to see the index continue to trend higher with continued trading in this blue color uptrend channel. So the resistance is likely to be between 5,300 to about 5,340, while the support is likely to be between 5,180 to about 5,230 area. Next slide, please. Okay, looking at our ETF monthly report for March, it's titled "Staying Bullish on Bitcoin, Hang Seng Index, Oil, and S&P 500." Looking at how it performed in March, it was a very good month. All the ETFs were in the green. The standouts were gold, oil, and Bitcoin, which were up about between 8 to about 13%. Now, in terms of their current trends, S&P, gold, oil, Bitcoin, and Hang Seng Index are currently in an uptrend, while US Treasury bonds and Singapore equities are in a range consolidation. In terms of our outlook for April, we remain bullish on Bitcoin, Hang Seng Index, oil, and S&P 500, while we are likely to see range consolidation for US Treasury bonds, gold, as well as Singapore equities. Next slide. Yeah, so diving into the individual ETFs, first I'll start with the S&P 500 ETF VOO. So looking at VOO, in the chart, we are still continuing to see price action remaining very strong, continue to trade in this short-term uptrend channel in blue. So for this month, we are likely to see continued upside given the strong momentum we see on MACD. Next slide. Then next one, I'll talk about the Treasury Bond ETF IEF. Look at the chart wise, it's still currently in this bullish flag consolidation and highlighted in blue, and with a bit of decreasing momentum as well on the MACD. So I think the performance for the upcoming month will be slightly muted, likely to continue to just trade sideways ahead. Next slide. Okay, next one is the gold ETF GLDM. This was one of the standouts. It actually broke through two bullish flag consolidations, which is actually a sign of a very strong momentum. So it actually is quite close to the target level of about 44.40 when we take the projected level of 90 cents in this blue color bullish flag projected onto the breakout point around 43.50. So I think in terms of, despite the strong momentum we see in the chart for gold, I think for April, we are likely to see some sort of consolidation and sideways trading as it digests the gains made in March. Next slide. Okay, then the oil ETF was also very bullish in March. So looking at the chart wise, actually there was a breakout of this cup and handle formation with very strong momentum on MACD. And we are seeing the price actually retest a swing high at around 155 form in November 2022. So I think in the upcoming month, it's still bullish on the oil ETF XOP to actually retest a further swing high at $161, which was another previous swing high. And then the eventual target could be even higher at close to $177 when we take the projected target level of the cup and handle. Yeah. Next slide. Okay, then next one is the Bitcoin ETF, which also outperformed. Currently is consolidating in this bullish pen shown in the chart with a height of $6. So with that, I think we are likely to see some sort of consolidation first, but with a breakout likely to occur in this coming month to create a new high for this ETF to reach a target level close to $39, given the strong momentum. Yeah. Next slide. Okay, then next one is for Singapore equities. Singapore equities still largely range bound, as we can see in the chart with this blue color range consolidation box over here. So we're still finding resistance at 325 level with another resistance at 330 as well. So I think that will actually cap the upside for this ETF, and we are likely to see some range consolidation still going ahead for these Singapore equities. Next slide. And then the last one will be the Hang Seng Index ETF. So looking at the chart wise, there's some positives. Finally, we see the price actually stand above the breakout of this downtrend channel over here. It's currently trading in this blue color uptrend channel. So that's one bullish sign. Another one is that it just continue to just trade sideways with increasing momentum on MACD. So I think for this upcoming month, we're likely to see the index actually break out and trend higher towards the resistance of the uptrend channel. That is closer to 60 to 64 Hong Kong dollars. Next slide. Yeah, so we also had a report on the Thai SDRs for March. So effective from today, we actually have new 5 additions for the Thai SDRs that you can trade. Which are Advanced Info Service, the Siam Cement, Kasikorn Bank, Delta Electronics, as well as Gulf Energy Development. In addition to the existing 3, which are Airports of Thailand, CPO, and PTT. Yeah. So in terms of the review in March, most of these Thai counters actually were in the green, with the exception of CPO and the Siam Cement, which were down about 4%. Then in terms of their current trends wise, we're looking at mostly range consolidation for all of them, with the exception of Siam Cement and Delta Electronics, which are currently in a downtrend. Then for this month in April, as a mixed performance to be expected, we are bullish about the prospects of PTT and Kasikorn Bank to extend their recent gains. The Siam Cement could pose a slight gain, but we expect the bounce to actually be modest given a strong downtrend. Then CPO is likely to be in a range consolidation, while the remaining SDRs are likely to be in a downtrend to actually continue some of the bearish momentum. Next slide. Now, so first out, looking at the Airports of Thailand chart, in March there was a rebound to actually retest this bearish flag resistance highlighted in blue. And then this was actually confirmed with the 65-60 previous support and resistance level as well. So with that, we're expecting some pullback ahead in April for this counter, and especially it's because it's still generally in a downtrend. It's just some bounce that we saw in March. So we are able to see it pare back some of these gains. Next slide. The next one is CPO. So for CPO, the chart is actually quite similar to Airports of Thailand. It's also trading in this bearish flag as well. It's just that we are in a lower. The difference is that currently price is at near the support of this bearish flag. So I think we could go on to see the price actually retest the support closer to about 53 baht. Then we can see we should see price sideways afterwards. So we are able to see some range consolidation going ahead. Next slide. Okay, next one is for PTT. PTT is one of the counters that we are bullish on. So looking at the chart wise, is consolidating in this bearish flag. But the bullish reasons for this counter is that we can see in the chart it has formed 2 bullish hammer candlesticks, which are alternating, which actually is a sign of strength. And then it's actually consolidating at the previous resistance level, which is around 155 baht level. So with that, we are likely to see the price break out of this range consolidation and trade higher towards closer to 160 baht in April. Next slide. Okay, next one is Gulf Energy Development, one of the new SDRs. So looking at chart wise, generally is trading in a downtrend channel, highlighted in black. But in terms of shorter trend wise, it's currently in a range consolidation, highlighted in blue. what it did in March was actually just trade to just a bit of a rebound, and then it did a retest of this downtrend resistance line highlighted in dark in maroon. So for the upcoming month, we're expecting it to pull back further as there's still some weak momentum, and probably it comes back down below to actually retest the range consolidation support area, which is close to 40 to 42 baht area. Next slide. The next one is the Kasikorn Bank. So Kasikorn Bank is another one of the counters I mentioned just now that we are expecting to be bullish in April. So looking at the chart wise, it's also generally in a downtrend, trading is downtrend channel. In the shorter term wise, also in a range consolidation. But what makes it different is that there was a false breakdown highlighted in maroon over in the chart. So there was a false breakdown below the 122 baht support level, which actually it recovered back above, and then it consolidated over there. So actually this is a bullish signal, and then we're expecting some bounce to take place towards the range resistance again, closer to 130 baht and above. Next slide. The next one is on Siam Cement. Okay, Siam Cement is trading in this downtrend channel in the overall trend. What it did in March was a breakdown of a range consolidation support and actually retested the channel support. So for this upcoming month, we're expecting a bit of a bounce from this channel support area, but I think it is likely to be modest given the overall strong bearish momentum we see in this counter this year, as well as the recent breakdown that occurred. Next slide. The next one is on Advanced Info Service. So Advanced Info Service, in the chart wise, is currently consolidating in this cup and handle formation. It's still in this pullback phase in the right handle over here. So for the upcoming month, I think we are expecting to see the price pull back further towards closer to 198 to 204 baht area as it continues to actually consolidate before a possible breakout in the future. Next slide. Okay, then last but not least is Delta Electronics. So for Delta Electronics, the overall chart is also trading in the downtrend channel. Currently is doing a retest of a previous support turn resistance close to the 72 baht level. So with a breakdown that occurred previously in end February, we saw a retest in March. Outlook for April wise, I think we're likely to see price continue to turn down and trend lower with a retest of this previous support likely to act as a resistance going ahead. Yeah, so next slide. Okay, next one for individual counters. The first one we have is a technical buy for Mapletree Logistics Trust at 146. Take profit levels at 155 as well as 160. Stop loss at 141. Stop loss close at 146 on Thursday. So looking at the chart for MLT, there was a breakout of this descending wedge following a double bottom signal at 141. So this actually provides us with a bullish signal. And what actually cements the bullish view is that when we look at MACD and RSI, there's also bullish divergence and increasing momentum form. So we're likely to see price do a rebound towards 155 first, then followed by 160. These two previous resistance levels. Next slide. Okay, the next counter is on Visa. So this is a technical sell at $260.60. $280.60. Take profit levels at 273 and 266. Stop loss at 286. The stock last close at $279.08 on Thursday. So what makes this counter bearish is that there was a breakdown of this uptrend channel highlighted in blue. This was following a double top formation and a false break above the $286 level. So actually this provides us with a few bearish signals, and then we are likely to see price pull back towards these two previous support levels, given the bearish divergence and decreasing momentum on MACD and RSI as well. Next slide. Yeah, so this is my last slide. This is just to summarize the two trades initiated just now. So currently for Mapletree Logistics is currently flat, while for Visa we are up about 0.5%. And so that's all from me. I'll pass on my time to Paul to talk about Singapore Weekly. Thank you.
Yeah, thanks. Sorry. Thanks, Dean. Next slide. So I'll just run through some of the key macro data that we observed. There was a release last week. So for Singapore, we had some industrial production. Just think of it like manufacturing activity. It's better than last year. I mean, last year was down 6.5, but it's moving along, just trending sideways. I mean, it's like 2.5. The hotel numbers continue to be strong. It's recovering. Think of it like sales, about 8% year on year. This is after fourth quarter 23. That means October to December, there were 3 months of declines. So starting to rebound as tourist arrivals, I think in February, jumped almost 50%. In Thailand, we tried to gather some data on the alcohol sales. So year to date, liquor is improving. I mean, it's still declining. It's still on the downward trend, but at least it's still growth. Beer is still down, so it's a modest improvement, at least for alcohol liquor. Then for Malaysia, surprisingly, the electrical and electronic exports are still down. I think semiconductor numbers are better, but I think for electrical items, electronics, that is still weak. In the US, we had the very important inflation number, which is the so-called core PCE, which the Fed uses to target their 2%. It is still trending downwards, but it's getting much harder to. The downward trend is getting a bit tougher. Just to give you some numbers, so month on month it is going down to 0.3, which is still too high. So at 0.3 trend line by December, you're still looking at a 3.7% core inflation rather than the 2%. So you need month on month numbers to hit 0.15. You need to slow down even faster or double the slowdown of the current trend. Otherwise, I think the inflation might actually bounce back up by year end because of base effects. We also looked at some of the data on the corporate spending new orders. So this is basically spending on machinery and so forth. So that is reasonably stable, but again, downward trend. Another data that comes out from the US is disposable income. I'm not sure how they measure it, but it's actually after tax disposable income to consumers or households or employees. So that is also slowing down. Next slide. So let's move on to our usual tactical trends. So we looked at how Singapore market performed. We have a table later for you to refer, but we were actually the worst performer in first quarter 24. Worst performer was actually Thailand, then Hong Kong, of course Singapore. So we are actually stable but dismal. So Singapore is known for stability, but when first quarter, when everything rallied, when a lot of equity markets rallied, we were stable. So we were kind of the worst performers in Asia Pacific. But the strength of Singapore, if I have to pinpoint to, will be our solid currency. So Singapore, again, is just a reminder that it's the only Asian country with a AAA rating. Since the pandemic, we actually had a lot of inflows. So we had like almost 250 billion of inflows, almost doubling our foreign reserves. And also we have one of the highest current account surplus to GDP. So current account surplus, what this means is that in terms of Singapore exports of goods and services to the size of the country, we are the highest in the world, at least for 2023. And we normally quite stable at 19-20%. We sometimes lose out to the oil exporters like Norway, Middle East, because when oil price is up. But apart from that, Singapore always has one of the best in terms of current accounts. And of course, our dividend yield, but dividend yield is going to be very sensitive to interest rates. So any delay in interest rate is going to affect the appeal of our Singapore market. But just going back to the interest rate, so right now, I think the interest rate cuts are going to be delayed and also lowered. I think the market is now moving towards 2 rate cuts now, from 6 in the beginning of the year to now 2. One of the reasons is that mentioned earlier, the core inflation is not trending down fast enough. So at the current pace, we actually could see inflation bounce back up to 3.7 from the 2.8 right now. One of the worries the market has is also the base effects. So second half of last year, second half 23, the inflation dropped very steeply. So as we move on to second half 24, the base effects are going to make it harder to compare year on year. So that's why inflation might be stickier for longer. That's the worry. And to make it worse, I think gasoline prices in the US are now back to 5-month highs because oil price took a bounce recently because Russia's planning to cut production by 500,000 barrels per day. And also the market now is trending towards 2 rate cuts. In terms of the key events, most of it is Singapore. I think by today we probably have some home price numbers. And the most important one is for the markets, at least, is the US payroll numbers. That means how many jobs added for the month. We have some corporate events and also our quarterly strategy by US on the 18th and Singapore on the 20th Saturday. So feel free to join us. It's open to everyone. I think if you just go to the Poems website. Next slide. So I didn't do a chart or anything. I just copied and paste from Bloomberg, but so just to let you have a look. So on the table on the left, sorry if it's a bit small, especially the rates hard to see, but this is the year to date. So the year to date here, you see here, there is arranged nicely. It's in local currency, and the year to date, which is in white, is actually it's green, but the top title is white, is in US dollar terms. So if you look on the left, year to date, at least for first quarter, Singapore is 0.5, or in US dollar terms, down 2%. Worst performer is actually Thailand, in US dollar terms, down 8%. After that is Hong Kong, Hang Seng. We don't really look at Shenzhen because Shenzhen is a bit more volatile, more tech related. But China we look more at Shanghai. So the best performers, if you want to refer in US dollar terms, at least is Japan, Vietnam 11%, and all these are Japan, and I guess Colombo. I mean, nobody buys Colombo, but if you want to refer to. Yeah, and Taiwan. Then on the left is just on the 1 year terms. So again, on a 1 year basis, again, our market didn't go down that much, but just that going sideways is dismal. So Thailand again on a 1 year basis is one of the worst, down 19%, followed by Hong Kong. Then it comes to us, China 11 points. Then us also, I guess we are the third, third worst or fourth worst. Yeah. Okay, next slide. Okay, but trying to paint a positive picture here, but at least in terms of Sing dollar, when we do marketing in Malaysia especially, I just want to remind one that our Sing dollar is on a very solid foundation. So if you look on the table on the left, it's just our rating, Singapore's rating, S&P, Fitch, whatever. No, US is only Moody's has a AAA, but no, just for a reference. So in Asia, Asia, we are I guess the most highest rated. And if you look at current account surplus, which is the other important indicator to support the currency, is the current account to nominal GDP. So Singapore is always one of the highest. 2023 were the highest after major exporters, even higher than major exporters like Taiwan, Norway, and even Saudi Arabia, because of oil price, and Switzerland and Germany. Next slide. The other thing is our dividend yield. So it's climbing up. Of course, interest rates are also higher, but at least we are on the highest for the decade for now. Another thing that's supporting our currency, sorry, I should have done this first, but it's actually the FX reserve. So we exited the year before pandemic, we were like 280 billion. Usually pre-pandemic, we were probably flat, probably plus 8 billion. You can see the numbers here, -8. But when the pandemic happened, there was a lot of inflows. You see this sharp blue line dropping mainly because the government transferred a lot of money to GIC and so forth to manage the FX reserve. I think it's about 270 billion Sing dollars. So if you add that back up, our reserves are around 530 billion. RMGS is the if you go to the MES annual report, so they will issue this instrument to GIC. It's called the Reserve Management Government Securities, I think. Yeah, I forgot the name again, but I think it's Reserve Management Securities. Next slide. Okay, so in terms of where the direction of interest rates, so right now, if you look at the numbers here, the second quarter, 17 basis points. So the market is not expecting any rate cuts now in the second quarter. Most of it should be at least one in third quarter and maybe one more in fourth quarter. So the interest rate expectations are now starting to move towards 2 rate cuts from 6 earlier the year. The problem is the red line here. So the inflation is trending down, but at this current pace, you might see it bounce back up. So in the box here, you see on the right is actually the forecasted. This is just an extrapolation of the current trend. So you can see actually inflation actually bouncing back up to 3.7 by December. Ignore the numbers here, trend line SCPA. This is a bit wrong here. Next slide. Okay, so in terms of economic data, most of the data points we see from US isn't great. I mean, it's either sliding down or just drifting sideways. So on the left is just the consumer income, and then on the right is corporate spending. Although there were quite a lot of tax incentives, but it doesn't seem to stimulate corporate spending. So these are new orders, excluding defense. Yeah, next slide. So look at some numbers in Southeast Asia. Alcohol is beer is bouncing at, that means contracting not so much, but alcohol sales for liquor is still sliding down, and surprising is even electronics in Malaysia. And it is just for reference. Next slide. Okay, as usual, every beginning of the month, on a Monday, we will just have a quick reflection on our March portfolio. So in the model portfolio, it was up 0.65. The one that hit us the most, if you look at the table on the left, is actually CapitaLand Investments. Even for the year, it's down 15%, but we still like it. I think it's hurt because the earnings was weak, because they didn't have those one-off event-related fees. And also, no, China rental was also down. So they've been hit by two factors, China and event-driven fees. But we still like it because we still think that they're building a very strong fund management franchise, and they're looking to double their assets under management over 5 years. The other one that took the hit was also Thai beverage, mainly because of the whole Thai market. The so-called fiscal stimulus is not returning yet. We did issue our new model, our report for the second quarter strategy. So what we did was we took out Fraser Centrepoint, replaced it with Crowmwell. We took out OCBC and replaced it with DBS. So for the year, we are down 1, the market is down 0.5. Next slide. Again, this is for reference on what sectors perform. This is our own way of classification. So what did well in March at least is the banks. So finance is banks. So usually, so it's up 5%, mainly due to DBS. And another one that did well was telecoms, mainly because of Singtel, was up 7%. The worst performer, if I look here, is probably consumer, down 3.9. If you look on the right here, it's just a snapshot of the top part is the snapshot of some of the small mid-cap stocks. It's not everything, but just a snapshot of some. So the best performance was Manulife, Dynamic, Jaffna. The worst was, I think, obviously, Cord Life, 17 Life, Micromechanics. And the bottom is just the index-related gainer. So Yang Zhejiang did very well this month, last month, and even this quarter, one of the best performance. After that was DBS. Then the losers, we still left Emperador. So Emperador is out of the index now, replaced by Fraser Centrepoint. I think on the 18th. Next slide. Okay, this is my last slide. So this is just our usual, just to relook at the performance in March. So Singapore was up to, this in US dollar terms, best performer was actually gold. ETF in March in orange, even better than the US equities. But year to date, the best performer is still US equities, up about 10%. Okay, all this just for reference. I think we can move on to Q&A. Yeah, thanks, everyone.
Yeah, I think I'll start the ball rolling. What's the average WALE for Cromwell? So the average WALE is 4.7 years. Yep. Any update on Mapletree Lock pertaining to their China logistics operations? Yeah, so not much updates from them. Just their latest third quarter results. So we have to wait mostly for more updates during their FY results, which is in April, or rather this month or later this month. Yeah, but basically for China, their logistics operations are still, the market in China is still not doing too good, especially for logistics, since COVID era, the e-commerce players, they expanded way too much. So now there's a lot of consolidation, and the demand for logistics space is not really there. So a lot of these China logistic operators, they are sacrificing rental reversions for occupancy. So they would rather have their portfolio occupied rather than empty, but at a cost for lower rents and lower rental reversions. Yeah, so yeah, we probably expect a few more quarters of this weak market for the logistics segment in China. Yeah, so that's the latest update that I have. Please comment on capital land. Yeah, so I think you're referring to the capital investment. So capital investments, yeah, like Paul mentioned a little bit earlier, the performance, the full year 23 performance was weighed down by a lot of loss in their investment properties. So other than that, I mean, they're also weighed down a bit by the China side of the business in the real estate investment business operations as real estate investment operations or business. Yeah, but the thing that we like about CLI is that their recurring fund management uh, income that they have, that they put in place, their fund management platform. So right now, their fund management platform, they have 90 over billion, and they target to hit 200 billion in 5 years. So that will help help them to generate more of this recurring fee income. And another plus for them is that the lodging business still is performing very well post-COVID. RevPAR numbers are still very high. A lot of RevPAR numbers are all-time highs. ADRs, average daily room rates, hit all-time highs last year. Might have dipped slightly this year, but still very high. Yeah, so these are things that are still going on well for CLI and that we like. So basically, it's the recurring fund management platform that when they grow the AUM, they also will increase the amount of fees that they can receive, as well as the improving lodging management business. What is a time frame for Crowmwell on their potential future portfolio 60/40 as a class split? Yeah, so this time frame is a long-term time frame. So it's about it's rather 2035 target. So it's roughly 10 years or slightly more than 10 years. So they need to do some redevelopments as well to there's some redevelopment plans as well to bring this to a 60/40 asset class split, because for this office asset, some of it needs to undergo some redevelopment, so it will take some time. So yeah, this 60/40 asset class split is yeah a 10-year target, a long-term target. Yeah, they also have one redevelopment, Park the Dog. So that is the bigger one. It's more of the industrial properties in France. So this one, yeah, is later term, like after FY26, they're still undergoing some memorandum and such. So yeah, so that's a later term. Why did Cromwell's price suddenly rise today? Yeah, I don't see any news, so yeah, I don't really know why as well. Yeah. Sorry, I don't know the exact reason why. Comments on Capital REIT, please. I think what you're referring to is their acquisition that they announced this morning. So for the acquisition, they're basically the Capital REIT. They're acquiring a property in Australia. So this property is in the core Sydney CBD area, and they're acquiring a 50% stake in this. This is a Grade A building, and the yield that they're acquiring it at is about is 6%. So we're estimating about 6.5%, and it's about 1.5% accretive to pro forma FY23 DPU. So the good thing about this deal is that they have rental guarantees in place for the existing vacancies and potential expiry. So the rent is stable, is already visible and rather secure in that sense, since there's rental guarantees, and they have a long WALE of 6.8%. So I think this is a good acquisition. Yeah. But all in all, the supply side in Sydney is still, there's a lot of supply coming on. So yeah, but if you just look at the stats for this asset, because there's rental guarantees in place. So yeah, we think this is a good acquisition for them. Yeah, I think I'll hand over to my colleagues first. Thanks.
Okay, let me take over. Okay. There's a question on capital infrastructure trust. So, in the extension of the KMC contract announced this morning, what are the good and bad points for KIT here? Okay, this Keppel Mermaid, the KIT owns 51%. The contract is supposed to end in 2030. Now the contract is with Keppel Energy, yeah. So when 2030, they're supposed to hand back the plants, the equipment, everything to Keppel. And because of this handover, from last year, KIT stopped distributing any income that is generated from KMC to conserve the cash flow that they have for the repayment of the loans that they take up for KMC, for this Keppel Mermaid cogen plant. So what happened now is the contract for them to operate this plant has been extended from 2030 to 2040. Okay, that nothing comes free. So there must be an amount that KIT has to pay over to Keppel to extend the operating rights for these plants. From the announcements, it's really very difficult to tell how much they are paying. It looks like my guess is this extension means that they need to fork out another about 343 million Sing dollars for the extension of the 10 years. This 343 technically determined as a operation and maintenance contract that they signed with Apple for the next 10 years. So and with this is the not so good part about this deal, which means that KIT might need will need shareholders' approval to spend this money, and also they will need to think of a way to find this amount of money to pay. Okay. If you recall, KIT is also buying another bus operations in Melbourne, which they already indicated very strongly that they are going to have a preferential offer, as well as if they can do a private placement as well to fund for that acquisition that they're supposed to incur 750 million Sing dollar. So this is the part. The second, the positive side of it is that KIT thinks that with this extension to 2040, the banks are now ready to relook at the financing option for this Keppel Mermaid plant. So therefore, they might not need to think about an expiry of their bank loans, which can be now pushed. They can kick the can down to 2040. So which means that they think that in the slides that they have presented, they assume that they can resume a distribution payment about 23.8 million annually from KMC, which means last year there wasn't this distribution disappeared. For this when this extension is approved, they might be able to resume a 23.8 million distribution additional from the point of per annum from the point of approval from the shareholders. So this is a positive side. That means that unit holders will get a bigger distribution. But bear in mind, you probably have to pay upfront in some way through a rights issue or a preferential offer or placement to secure these rights for another 10 years. So these are the positive and negative. They highlighted that all these details will be available in a circular that will be released this morning, but I have not seen it yet on the public domain. So we will come out with a short note on P3 when I have the definite numbers and we can share with everybody. Thank you. Okay, Peggy, last week court settlement for Seatrim, has that already priced in? will this issue has any repercussion effect on Keppel, which also had Brazil bribery issue? Thanks. Okay, Keppel's also faced the Brazilian bribery issue, but they face it much earlier. I think, if I'm not wrong, it started in 2014. So it was quite long drawn. It took about 7 years to settle it. So now it's Sembcorp's turn. I mean Seatrim's turn, because Seatrim is taking care of the Sembcorp Marine's problem. But Keppel has an agreement with Seatrim that Seatrim will indemnify Keppel up to 100 million for any claims that Brazil might have. This case might have any claims on Keppel. So for this, the Seatrim has already provided for 82.4 million in their books for any indemnity that they have paid. They will need to pay Keppel. So looks like on Keppel's side, there's impact is probably nothing or fairly negligible. And this indemnity will last for 24 months after the merger after the combination of Keppel and Sembcorp Marine. Whether it has been priced in, I think because they took the entire 80 million and that's about 80 million they put it into FY23 account. So 23 total loss for the year was FY23 was 2 billion. So for FY24 onwards, there's no impact on the numbers. But the NTA net book value has also dropped to 9.3 cents after this provision made for made in FY23 numbers. Okay, yeah. So whether it has been priced in, I think the market likes to think that is behind us, because this second part of the latest news is really relating to Singapore. So it looks like the Brazilian side, they have already reached a settlement agreement with the Brazilian authority. So I think it's probably already largely behind us in terms of this corruption case. But yeah, but it probably, because of this, it might not be able to satisfy many of the ESG requirement by ESG funds. So you don't see any ESG related funds that's open to pick up Seatrim shares so readily. Even if Seatrim will increase their exposure to more green types of contracts in their order book. Thank you. I think there's no more for me. I pass back to the rest. Thank you.
Hey, thanks, Maggie. I think I'll take this. There's a few questions about SGX. Basically just asking about, hold on, let me find it. Update on the performance of SGX and IFAS. What's the view of SGX going forward, and also why the sudden share price has pulled back a lot. Yep, so I'll just take SGX firstly. I think for SGX, the main growth driver for them moving into the rest of the year would be their OTC FX business. So if you look at the other two, they are the main, at least the main four main segments now. We have the FICC, which contains that OTC FX business, and then you have equities cash and equities derivatives. So equities cash and derivatives is has been on a decline for the last couple of quarters and halves already, because mainly due to their decline in the listing as well as their trading and clearing revenue, which is to be sort of to be expected. So I think they are just banking on this FICC, which actually grew 28% year on year the last half. Yeah, so this comprises of their OTC FX business, mainly their BitFX, MaxTrader, and their electronic communication network. So this was their recent acquisitions, and it has actually shown quite strong growth. So they are looking at it to reach their average daily volume target of $100 billion by 2025. So currently in the first half, it's at 100 0.1 billion. So they're well on track to reach that target. And I think this will, what they have mentioned about how they're going to continue growing this and where they are getting this growth from would be from with a focus mainly on their digitalization as well as risk management services. And they also sort of counting on the expanding emerging market opportunities. So they are not really trying to take the market share from others, but more like growing together with the market. So as the market grows, they will also, their share of the pie, so-called, will get bigger as well. Yeah. So for that, I think that's for also one more thing that they are trying to sort of improve their bottom line is by lowering their costs. So previously I think they were guiding for a higher OPEX growth of around 5%. So now they are looking at around low single digit of 3%. And their CapEx guidance has been lowered from 75 to 80 million to 70 to 75 million. So I think that they're seeing that that's one of the few ways which they have control of by controlling their OPEX, which will improve their bottom line. Hope that answers the question. Oh yeah, there's one more also. The share price has pulled back a lot. I don't think, I mean, if you look at like the year ago, it's only down like about 1 or 2%. So it's been rather, I would say, flat, the share price. It hasn't really gone up much, but it also hasn't gone down much. I think that there's one more about the Solana. Let me see. Oh yeah, there's one more about iFast as well, and for the TA. So I'll leave that question up there for Zane to do the TA for both SGX and iFast. For iFast, I would say their last quarter's results was quite impressive, but it was sort of to be expected because both their core revenue, which is their AUA, and their non-banking net revenue was actually up healthily, and their Hong Kong e-pension business income also kicked in, which caused that huge growth for their net income and their bottom line. So this is sort of to be expected, and they have also guided for a similar guidance, at least for profit-wise. So that has been the same, but the revenue has gone down. So I guess they have managed to improve their margins for the e-pension business. And I think the main thing that will sort of nobody really knows what to expect. It would be their iFast Global Bank. So that has still been loss-making for the company, but they are targeting for break even by the fourth quarter of 2024. So they have seen that their customer deposits have been increasing every quarter, so that is also good for them. So if that starts to kick in, then that might be the catalyst for them to grow even further. Yeah. So I hope I have answered all the questions. Okay, sorry, there's one more. Yeah, maybe so asking about the treasury income. We previously pointed out that SGX has thrived on their treasury income due to the rise in interest rates, and with interest rates being slow to come down, wouldn't this continue to help SGX? Yeah, that's for sure. You'll definitely see the higher for longer rates, excuse me, continuing to help SGX. But you must take note that they are putting it in a lot of places, right? So they did mention they're putting it into fixed deposits. So if the market is thinking that interest rates will go down, the banks and the companies that provide these fixed deposits, they're also not going to give very high interest rates, right? Even as an individual, you have seen interest rates for this kind of fixed deposits. They have dipped quite drastically from maybe a year ago, right, when the Feds were still doing their rate hikes. So we have seen in the last half, at least, we have seen that their treasury income has actually dipped half on half. So we might see this start to continue to come down. And they didn't really say much, but I did ask, and what they mentioned is that they do expect the treasury income to go down, to dip to a more moderate level, at least moving forward. So I don't think the treasury income will be a real catalyst for SGX, at least moving forward, because as long as the rates are not continuing to go up, or they have stagnated at these high levels, it might not be really this boost for SGX. And do you think? Yep. So we do have accumulate on SGX with a target price of $10.53. Okay, I think that's all. Let me double check. Yeah, that's all. I'll hand it over to the rest of my colleagues. Thanks.
Meow.
Yeah, hi. There's a question for Suntech rate. Let me find it. What is the update on Suntech rate? Has their valuation dropped it and gearing increased? For Suntech rate, the valuation didn't drop. They already did the year-end valuation last year, and overall it still increased by 0.2%. Yeah, Singapore side was backed by the very strong rental reversion, which offset the decrease in valuation of the overseas asset. Yeah, they'll probably have the next update early next month, but we don't expect there will be a major change in their gearing. Yeah, we'll update accordingly when they have their first quarter announcement. Yeah, thank you. That's all for me.
I see there's a question on STI ETF. So unfortunately, we did issue a report on STI ETF, but that's a non-ready report. So we didn't really come up with a recommendation target price. So I cannot really comment on the projection. But currently, we got two STI ETF, one the SPDR, one the Nikko AM. So currently, their dividend yield for the last 12 months is around 4.41% and 3.98%. So that translates to around 13 to 14 cent dividend. Yeah, that's all I can answer for that. Thanks.
Yeah, I'll take some, then hand it back to Darren. So okay, any visibility of money market funds still on sidelines pertaining to US equities? Yeah, the money market fund, you do have to take note. The spike you see in money market funds is because a lot of it is flowing out of the bank deposits going to money market funds because the interest rate there is higher. A lot of these money market funds buy reverse repos, which is just a fancy term of parking money with the Fed, and they earn almost like 5%. Whether it goes to equities, I'm not so sure. No, I'm not so sure. It means that there's a lot of money on the money market funds. It means that it will go. It's like any corporate that has excess funds, would they go and buy securities? Because the money market funds could be used for working capital, could be used for a variety of things. So it's not very evident. Yeah. I think, of course, the other way to check is to just look at deposits, money market funds versus the US market cap, which I don't have the data. So unless that's very elevated, then it just means that there is a likelihood that liquidity is ample and it could flow back in. The problem I have is that Singapore also has a lot of liquidity. You saw probably like 200 billion come in, but none of it goes to Singapore equities. Yeah, so I'm not so sure whether these money market funds really will go into US equities. Yeah, and a lot of it is actually leakage, well, not leakage, a lot of it is just flowing out from bank deposits, which I think even more you can ask Glenn. Pertaining to the next question, thanks, CK. Pertaining to Singtel's dividend policy change as to pay out 10% more from underlying net profit. Is this good or bad? Yeah. This is generally positive. I think they give themselves a window is 70 to 90. It used to be 70 to 80, if I'm not mistaken. So it just gives them a bit more leeway to pay out if they wish to. To refund the growth, they actually have another bucket of money which they're going to do divestments. So from those divestments, not all of it will go into paying dividends. So the recurring one they'll pay out. In a way, it also enforces discipline on these telcos. Because for them, Optus has been the main problem because Optus always, I think, made like 9 billion of capex over the last 5-6 years, but the profits still come down. So they need this kind of metrics to ensure some discipline, rather than not having. So for me, it's more of a bit of a positive, and they can still grow because they're using some of the divestments to reinvest in the business. Okay. Okay, I think I'll move on. I'll hand it over to Darren. I think a lot of it is his. Yeah.
Yeah, thanks. Any update on Capital DC Digicore Solutions? Yeah, so Capital DC, not much updates. No updates since the FY results, other than the fact that they've settled out of court the litigation with DXC. So yeah, just no new updates. Basically, the same thing. They are affected by the China data center tenants who have not been paying rents. So we just factored in that they will have to eventually replace the tenant. So there's no updates on that as well. So in my view, I think they're still not getting paid the rents for the China data center tenants. Because if I think that there'll be any good news, probably they'll come out with a news, some kind of report, or rather announcement, not a report. Right? They'll come with an announcement. Yeah, but since there's nothing from them, yeah, probably they're still not paying any rents. Yeah, so that's the downside. But the fact that is that post the results and the announcement of this, the share price has really corrected quite a lot. It really crashed since the announcement that the China data center the tenant has defaulted on payments. Yeah, so after we account for the fact that the DPU adjustments, like lower DPU and such, we still have an accumulate rating on Capital DC with a target price of $1.86 since the share price crashed. Yeah, so cost situations, not much updates as well. Just that today they had an announcement that they will acquire another 10% stake in one of another 10% interest in the data center located in Japan, and they've secured the financing for that. So yeah, other than that, not much updates for Digital Core. Yeah. What's the difference between Crowmwell REIT EUR bracket CWBU? So that's the ticker, and the Crowmwell REIT SGD CWCU, the Singapore ticker. So what's the difference? Basically, no difference. It's just that Crowmwell, they have dual currency listing, so they are listed in both currencies. You, as an investor, you can choose to trade in both euros, which is the first ticker that you mentioned, the CWBU, Cromwell REIT EUR, or the Singapore Cromwell REIT SGD. Yeah, but we recommend trading in the euro one because it's more liquid there as compared to the Singapore one. And yeah, since you're already investing in Cromwell, you're exposed to the euro, so why not just collect your dividends in euro as well? Yeah. The trading liquidity and volume is more in the euro counter as well. So yeah, no difference. Actually, you can buy and sell in the other, but yeah, but I just recommend trading euro because of the higher liquidity. Okay, this one. Please comment on the target price for CapitaLand Escort Trust. Yeah, we have a target price of $1.04 and an accumulate rating on Escort. And the other one, the Genting Sing. Yeah, unfortunately, we do not cover Genting Sing, so we do not have a target price. But perhaps Zane could come up with a TA target price for us later. What's your view on a likely recession in Europe area and its effect on Cromwell? Yeah, so the economy in Europe's not doing too great. But we don't think they'll slip into a recession actually. But we do, like a lot of economists, they are forecasting a very low GDP growth, but it's still not. It's still like a sub 1% GDP growth, and inflation is also trending down, but slower than expected. But all in all, we still do not think that the likelihood of a recession is high in Europe. But in the event that there is a recession in Europe, Cromwell will be definitely impacted, especially like the fact that the rents will be the rents will be affected because of the tenant demand, like the demand for their properties, like industrial properties and office buildings, probably like as workers get retrenched and such in a recession, yeah, the need for all these office buildings might not be there. So yeah, the demand for these assets will definitely decrease, and as a result, the rents will also decrease. Like rental reversions and vacancies will also increase. So I mean that is the same for any country or any REIT that they're operating in an area that is undergoing a recession. So yeah, not much difference on the effects of a recession on the REIT or on Cromwell for that matter. Please rank your preference of S-REIT sector: retail, commercial, hospitality, logistics. And at this moment, do you prefer locally based REITs or those with overseas exposure? Yeah, so for our S-REIT sector preference, we still prefer hospitality sector the most, followed by retail. Yeah, because hospitality, we think that the RevPAR growth is RevPAR numbers are way higher than pre-COVID levels already. So RevPAR growth will definitely slow down, or in some cases even stagnate or even decrease slightly. But that's because in FY23, the RevPAR was really insanely high. It's already all-time high already. So yeah, it's hard to see it just keep breaking its all-time highest levels every subsequent year. So yeah, because ADRs, like average daily room rates, are already very high. Like I'm sure you go travel overseas, you've seen the room rates way higher than pre-COVID levels. So yeah, we expect RevPAR to remain high, but maybe the growth stagnate a bit. But as a result, the REITs will stand to benefit from like the variable component. Like when RevPAR is high, then the the REITs will get a higher variable component from the rent as well. Yeah, so that's followed by retail. Retail, we think that the visitor arrivals, especially from China, like we've seen the February numbers. The February numbers for Chinese tourists, it grew 10 times year on year since the 30-day visa-free travel between China and Singapore. So because of that, we think that the Chinese tourists will come back to Singapore and start spending, especially at the downtown areas where they buy their luxury products and luxury goods. So that will probably help with retail and the rental reversions going forward. So that's why we have it as second, and that's followed by logistics and commercial. Yeah, so we prefer the hospitality and retail subsector. At this moment, do you prefer locally based REITs or those with overseas exposure? Yeah, so if you are, okay, this is my personal view. So if you are a very risk averse investor, I would say that you should invest more in REITs that have more Singapore exposure, because Singapore properties the valuations are relatively stable, and we don't see many tenants defaulting in Singapore as well. So the stability is there and it's lesser of a risk. And the share price of most of these REITs as well, that with Singapore exposure, they do not fluctuate as much as those like with overseas exposure, for instance. Like we've seen the US office and maybe even Cromwell as well. Cromwell, the share price fluctuates quite, it is quite volatile as well at times. So if you are a higher risk investor, you could consider investing in overseas REITs, because most of overseas REITs, they're also paying higher dividends to make up for this excess risk and volatility in the share price. So yeah, that is it really depends on what you're looking for. Higher yield with slightly higher risk and you have to stomach the volatility of the share price, or lesser volatility with the Singapore-based REITs. But of course, at the cost of a slightly lower dividends. What is your view on Fraser's Centrepoint Trust? So for FCT, we still have a buy call on FCT. or rather an accumulate call with a target price of $2.38. We think that even though retail sales or tenant sales has kind of plateaued, it's still above a pre-COVID levels by about 15%. And the population growth will definitely help to benefit suburban malls like FCT's malls, and international visitor arrivals will also help to benefit them, but to a lesser extent as compared to downtown malls, because FCT the more the malls are not in the prime areas and they don't have many luxury tenants as compared to the downtown malls. So we still think FCT there's still growth there. And yeah, we still think positive rental reversions are also possible for FCT. For previous logistic also we don't really cover, so I won't comment on that for now. But I'll leave it to Zane to do some technicals on it. Singapore hospitality assets should do better than other countries, right? Both also would do well. I wouldn't say which would do better than the other, but like we've seen RevPAR numbers this year because of the solid lineup of concerts and MICE events. RevPAR numbers are expected to continue its growth trajectory year on year. But we expect likely high or mid single digit RevPAR growth this year for Singapore. I mean that is compared to last year in November and December where RevPAR growth fell year on year. Yeah, so this year we're expecting Singapore assets to do very well. Other countries, other countries are doing well, like UK, US, all these, Australia doing well. Just that the weaker countries are China and Vietnam. They've yet to open up fully, but we're seeing it recover slightly over time. And the numbers for China and Vietnam are not yet at pre-COVID levels for RevPAR, but I think it might get there. Yeah, for China, I'm not seeing the latest numbers, but after the reopening, I think, and the visa-free, the mutual agreement arrangement with Singapore and such, yeah, we think probably this quarter it would have already surpassed pre-COVID levels. REITs on expectation of spending from Chinese arrivals, which REIT will be a beneficiary? Yeah, so the hospitality REITs, of course, that's the direct beneficiary, and as well as hospitality REITs like with bigger exposure in Singapore like FEHT. I mean FEHT 100% exposure in Singapore, but that's a direct beneficiary, as when they come here they have to stay in a hotel, so they just book a hotel and that will help to benefit occupancy rate for these hotels, and probably as demand is higher the rates will also increase. And so that's the direct immediate beneficiary. And then there's a secondary beneficiary or indirect, so that is like your retail, where these tourists might go to spend at this downtown mall. So REITs like Paragon REIT and maybe CICT and maybe OUE with these downtown malls, they might benefit from this arrival Chinese arrivals as well, increase in Chinese arrivals as well. Okay, I think that's it for now.
Let me do one
Ah.
question on Yang Zhejiang Financial before I pass to Zane. Hi Peggy, has Yang Zhejiang Financial shares purchases reached its mandate limit yet? I think this question, this participant is asking about the share buyback, I guess. They have, since the last mandate given to them in the last AGM, they have a mandate to buy up to 367 million shares. So if I look, I did a rough calculation that they have 160 million treasury shares on hand. As what they had purchased this year. So it looks like they are quite near to that limit. But then again, they are committed to renew this mandate, and at the next renewal will be at the next EGM, which will likely be held by end of April. So very soon they will have another new mandate, give them some more room to buy back shares. Note that the current share price at 32.5 cents is about it's about 70% discount, 70% discount to the net book value. Yeah, that's all for me. Hand over to Zane, maybe. Thanks.
Thanks, Peggy. I'll move on to the TA portion. Okay, so I think first question is on FCT. I think for FCT currently we're likely to see continued range consolidation. It's just consolidating in this range with support around 215. Some positive is the higher lows formed recently. So I think we could see a bounce towards around 223, 224. Then it just continues sideways thereafter. And the next question is on SoFi. Okay, for SoFi, I think it's still showing some signs of weakness. Still finding resistance along the downtrend resistance line, and then previous support and resistance around 750 level. So I think we're likely to see a bit of a continued pullback. Maybe it does a range consolidation first between like 690 to about 750 area. And Hong Kong counter 1038, CK Infrastructure Holdings. Okay, I think what's a good entry? What's a good price to buy? Okay, I think for this counter is currently doing a range consolidation. So I think a good level to buy will be at the support, which is currently around 4380 to about 4450 area. So I think you can look to enter when there's a dip towards the support. The next one is on Broadcom. Okay, for Broadcom, I think there was a retest of the resistance at around 1004, and subsequently there's a pullback afterwards. So I think for now we're able to see some form of range consolidation here. I think near-term support will be around 1285 this level. Resistance probably 1350 onwards. So I think just some sideways for now. Okay, then Amazon is the next one. Generally in a range consolidation, but I think we could see the price actually go higher. Actually there's some higher lows along the way, and then just consolidating at the resistance around $180. So I think once the price can actually break above this level, we could see it trend towards 185 to 189, which was the previous resistance levels. Okay, then next one is on Google RC. So for this, I think currently it's doing some range, actually doing a bit of a consolidation. Looks like an ascending triangle, higher lows from the way. Resistance to 153, which was the previous gap around here. So I think if still towards more bullish with the higher lows recently, I think if we can see a breakout, then I think we probably see a retest around 155 next. This one is Capital DC. But for Capital DC, I think some range consolidation recently still looks like a double bottom at 165. Currently, I think some sideways along at the neckline 173, 174, which was a previous support breakdown over here. So I think maybe the price will just sideways over here a while. If you can hold, then I think it will be a bullish signal to actually trade higher towards the higher resistance close to 180 for Capital DC. Okay, then next one is on Hong Kong Land. Okay, Hong Kong I think generally should be still in a bit of a range consolidation. Overall, still downtrend. We have this downtrend resistance line acting on it, as well as the horizontal resistance go to $3.20. Yeah, so I think price will just probably sideways around $3 to $3.15 around there for now. Okay, next one is on Seatrium. Okay, for Seatrium today, some rebound taking place. I think it's doing a retest of a prior support levels. So I think near term wise, there's slightly still resistance from 86 to about 88 around there. 86 was a previous support downtrend resistance, and then 88 is this downtrend resistance line. So I think it's just a slight bounce. Then maybe we see some consolidation thereafter again. Okay, the next one is on UMS. Okay, UMS, I think generally wise for now, probably range consolidation between 132 to about 138. So I think price will just actually trade in this sideways fashion for the time being. Okay, the next one is on Franklin. Franklin also quite sideways for now. Yeah, I think for now it's in a tight range between 164 to about 170 about there. So I think price will continue to hold around here. Then if there's a break upwards, then we're likely to see a retest of 174. The Aztec Global, they are also doing a range consolidation for now. Yeah, so you can see in the chart, 105 is currently resistance. Support is around, I would say 99 cents to about $1. So 99 cents was a previous swing high, now acting as a support. So I think just some sideways movement for a time being. The next one is on iFast. Okay, for iFast, I think some probably range consolidation for now. So it did a retest of the prior support level close to about 705, 706, then pull back again. And near the support, which is around 656 or 665 about there. So I think probably just some sideways trading for a time being. Okay, then next one is on ST Engineering. Okay, ST Engineering, I think it still looks quite positive. Following the range breakout, 390 to about $4. It is currently holding above $4. So I think based on this range projection, a 10-cent range, we could see price continue to trade higher towards $4.10 around there. Okay, next one is on Semcom Industries. Semcom Industries did a retest of this double top neckline support breakdown around 540s. So I'm expecting price to just actually consolidate sideways for a while first, with near-term support around 535 as well as 525. Okay, can you please advise what support level might be for Visa, and is it a sell for a long hold? Okay, I think for Visa is a short-term sell. In terms of long-term wise, I think it's still a hold. When you look at the overall chart, it's still definitely above the longer term MAs like 50-day, 100-day, 200-day SMA. Short-term wise, I think we'll probably expect a pullback. Support level will probably be around this 273, 274 level, then followed by 265. Yeah, as I indicated in the chart here. Thanks. What's your thoughts on MasterCard in view of Visa being a technical sell? Okay, I think MasterCard is a little bit stronger. Recently it did a retest of prior resistance around 475, 476, still holding above there. So I think, yeah, the uptrend is still holding over here. But a bit of a warning sign probably is the bearish divergence signals starting to flash on MACD RSI, some decreasing movement. So if there's a break below this key level of around 475, right, then I think it might warrant a short-term weakness for MasterCard. Okay, next one is DraftKings. Okay, DraftKings, I think seeing a pullback from this uptrend channel resistance from $49. So did a retest of this breakout at 45. So I think short-term wise, we could see just some sideways consolidation first. Then next one is a USB, which is US Bank Corp. US Bank, I think it did a retest of the swing high at close to 45. I think probably some sideways first, around 43.80 to about 45, but more towards upside bias, because after a very long consolidation below this 44.50 level, then price broke out. It did a retest and before moving higher. So I think maybe some sideways first before it moves up higher in the near term. Next one is a Western Alliance. The Western Alliance generally range bound still, but some positive signs. I think it's forming higher lows recently towards the resistance at 60, close to 64. Then I think if this can hold up, I think we are likely to see price climb up further towards higher levels like 67 as well as close to 70. Okay, the next one is on Verizon Communications. For Verizon, there was a break above this range of between 39 to 41. So I think we're likely to see price do a retest of the swing high over here, which is around 43. Yeah. Then for Ally Financial, I think generally trading in this rising wedge pattern over here. Recently broke out of this resistance at 38, probably doing a bullish flag over here, between 39 to 40, 41.5. Yeah, so I think we might be seeing some consolidation first. Okay, next one is on AT&T. Okay. AT&T also looks like breaking out of this consolidation range over here, higher lows along the way. So I think we could see the stock price gradually trend towards 18 again, which is this swing high level. Okay, next one is on Wilmar. Okay, for Wilmar, I think still quite range bound actually. So some positive is that higher low was being formed over here around 337, 338. Resistance still coming close to 350, 355. There's also likely resistance from a downtrend resistance line over here. Yeah, so I will expect still very much range bound movement ahead for Wilmar. And next one is on Food Empire. Okay, for Food Empire, I think some short-term weakness, we're seeing price trend downwards along a downtrend resistance line. As well as broke down a key support around 130, 137, 138. So I think for now, you might do another retest, just some sideways price action first between 133 to 137, 138. Okay, then for Vicom, a range bound as well, I did a retest of a support at 137, but resistance likely to hold at this 141, previous support breakdown. So I think some range bound ahead. Okay, then next one is on SGX. Okay, for SGX, I think is weakness in terms of price along this downtrend resistance line. Probably we will see, yeah, today it did a retest around the one support level at 1913. So if this holds, we will likely see some short-term rebound towards like $9.30, which is this support level breakdown over here. If it can't hold this level, then we could see some further downside towards $9 for SGX. Next one is on CapitaLand Escort Trust. Okay, for CapitaLand Escort, I think some range consolidation recently between 90 cents to 94 cents level. If it can hold at, I think probably with just some sideways action first around this 93, 94 cents area. If can hold over here, then I think some upside is likely towards 96 cents as well as toward 98. Yeah, 96 to 98. Okay, next one is Genting Sing. Okay, for Genting Sing, I think currently probably just some consolidation in this falling wedge over here. I think some bullish signals have emerged with the bullish divergence, as well as you can see, there was a false breakdown below 88.5 cents, and price recover afterwards. Currently testing a resistance at 90.5 cents. So I think overall going ahead, I think I'm still very short term wise, I'm bullish on Genting to do some further rebound towards like 92 to 93 cents area. Okay, next one is Nvidia. Okay, for Nvidia, there was a break above 920 to do like a double top, then subsequently pull back to do a retest. So I think probably we're going to see some sideways action around here first. Short-term resistance, I think likely the first level is probably around 940. Then the 960 to 970 resistance likely to hold. So I think we can look forward to some sideways price action for the time being. The next one is on ExxonMobil. Okay, for ExxonMobil, very strong uptrend recently, just gradually trending upwards. So I think we're likely to see price actually retest this 118, 119 swing high over here. Then Occidental also a very bullish chart. Yeah, Occidental had a double bottom, and after the range consolidation breakout, price has been trending higher. We're likely to see price slowly trend towards the resistance, which is around 66 to 67. Okay, then I see a question on Bitcoin. I think Bitcoin, after a pullback recently, price has gained some footing again, standing above the 68K level over here, and currently doing probably I would say an ascending triangle consolidation. So still overall still very near term wise, I think still leaning towards more bullish. If you can break out above this 71.5K level, we're likely to see a retest of the swing highs close to 73.8 over here, to maybe do a double top. Okay, then I'll move on to some other Hong Kong counters. 9888, Baidu. Okay, for Baidu, I think still nothing too much, just some sideways action. Still, key resistance likely to be still around 105 to 107. Horizontal levels as well as this downtrend resistance line. So I think probably just some sideways action now between 100 to about 105. Okay, 981 is SMIC. Okay, for SMIC, some recently when there was a break below this range consolidation 1630 level, then it did a retest of this prior resistance around the 1530. So I think for short term wise, we're likely to see a bit of a bounce, but likely to be modest. with resistance, we are likely to see a lower high being formed given the structural breakdown over here. In 9988, it's Alibaba. So for Alibaba, I think currently it's at around, it did a retest of the support at 69 over here. So I think we are likely to see some short-term rebound, but the current trend, we are still seeing lower highs with 75, then 73. So I think we are likely to see a bit of a lower high, maybe 72, probably a short-term resistance, then some sideways action thereafter. Next one is 2318, Ping An Insurance. For Ping An Insurance, I think short-term wise, I think some weakness with the breakdown of this uptrend support line. And then recently it did a retest of the lower support levels. So which is around 31.6, 32.6 area. So I think at this area, you'll probably just sideways, go sideways for a while. The next one is on 700, Tencent. Okay, for Tencent, I think looking a bit more positive, there was a breakout above these 295, 296 area. Did a retest of the swing high at 305 over here. So maybe some sideways consolidation first. Another key thing to note will probably be this breakout of this downtrend channel resistance as well. So you can hold above, then I think some further upside to be expected towards 317 as a 318 as the next level. Okay, I'll go through the TA for, see a question for Xing Chung, right? I'll just go through the TA for it. Yeah, for Xing Chung, I think short-term wise still a bit bearish. So the $1.55 previous support turned into resistance over here, and then price rejected of it. So I think probably we're gonna see price come lower towards 150, do a retest again, and just consolidate in a range thereafter. Okay, I see a question on Yang Zijiang Shipping. Can go further towards $2. Okay, for Yang Zijiang Shipbuilding, I think for now I'm leaning more towards still some sideways consolidation. Looks like a double top over here, might be a false breakout. With actually a lower high in MACD and RSI. So actually we have bearish divergence. So if for now, the key thing is whether 190 is able to hold over here this breakout level. If it does, then maybe we see some sideways, then it could just consolidate for a while. But if it doesn't, then maybe we see some a bit of a further pullback towards 183, this support level. Okay, then just maybe some range consolidation first. But $2, I think might be still possible, but probably in the longer term. For the short term wise, I think probably not for the time being. The STI seems to show double bottom. What's your view? Okay, I do agree that STI is still a double bottom around the 3,100 level over here. So currently we're at the neckline resistance again, which is around 3,250 level. So I would think probably just some sideways action to consolidate first. Yeah, for the time being, given that we are currently at around the resistance. The next one question is on Realty Income Corporation. Okay, for this, I think looks like a break above this range resistance at 53. So I think you could see some upside towards previous resistances like 54, 60, 54, 70, then followed by higher resistances close to 55, 60, 59, 70. The next one is on MPW, Medical Properties Trust. And for Medical Properties Trust, I think generally quite range bound, support close to close to 4, then resistance around 480 around there. So recently there are now retests of this resistance. I think probably we're gonna see a bit of a pullback and some sideways after. And there's a question on SWN. Okay, Southwestern Energy Company. Okay, for this, I think after the breakout of this $7.10 level, price has been trending upwards. So I think we'll likely see price do a retest of this high around 770 over here. The next one is on CLI. Okay, for CLI, I think it's currently consolidating in this bearish flag over here, given the prevailing downtrend. I think maybe some sideways action between some range between 268 to about 278 about there for the time being. Yeah, I see we in a counter CLIT. I'm not sure. Can't find the ticker for it. Yeah, maybe you can retype it. Thanks. Okay, then there's a question on Ascendas REIT. Okay, Ascendas REIT, I think for now looking more positive. We are seeing after the double bottom at 265 price holding broke out this downtrend resistance line, first thing. Second thing, above this resistance at 276, also over here. Looks like a back test. So I think if this holds, then I think I'm more positive for price to actually climb higher towards higher levels of resistance like 286 as well as 290 about there. So I think looks like a potential reversal taking place for now. Okay, then there's a questions on Yoma and Thomson Medical. Okay, for Yoma, I think recently priced a lower low, but then with bullish divergence, higher low on the indicators. Currently doing a retest of the previous support and resistance. So I think probably some price will actually just sideways for a while over here, around 44, 45. But if you can form a higher low, then I think it's more bullish to do a retest of 48 afterwards. Okay, next one is on Thomson Medical. Okay, for Thomson Medical, I think generally still quite range bound over here. Yeah, we've seen price action support close to the 50, 51 and resistance around 54, 55 per typing. So I think that will still continue. Then next a question on DBS and Straits trading. In DBS, I think very strong momentum. We're seeing price actually break above this blue color trend line resistance. I'm expecting some sideways consolidation for the time being. If price is actually trading along this 5-day moving average improve, if can't hold, then I think we'll go a bit lower towards the 10-day moving average, which coincides with this horizontal support around 35.50. So I think maybe some consolidation first for DBS after a strong run. The next one is on Straits trading. Straits trading generally we are seeing a downtrend over here, but I think maybe a bit of a range consolidation taking place for the time being. Yeah, between 143, 153 level. Key need to see cannot see a lower low being formed. If not, we likely see the downtrend continue. So maybe some consolidation first for the time being. But overall, I think it's still a very still a very strong downtrend we are seeing for this counter. Okay, then next one is on IIPR, Innovative Industrial Properties. Okay, for this, I think recently there was a breakout of this range consolidation over here. Then I think we could see currently it's doing a retest of the resistance at 103 about there. So I think maybe some sideways first. But I think gradually we could see a price hit higher towards the next resistance around 110. Given the recent this stretch of bullish run. And this one is on SCCO. Southern Copper Corporation. Okay, I don't have the detailed chart right now, but I think it's currently at all-time highs. I think a copper price is also at the highest recently. So I think for now, maybe it looks like a bit of a bullish flag taking place for now. Yeah, maybe some side around here. Yeah, then if we can hold this, then maybe we might see more upside for new all-time highs again. Okay, then there's a question on Marathon Digital. Okay, so for Marathon, I would think for now maybe some range bound action. So previously we had this neckline support breakdown around 23.5 over there. On last Thursday, it did a retest. So I think for now, you might see some sideways action with support around $20 around there. Then for Riot, let me take a look. Okay, for Riot also similar, a bit of a range consolidation for timing, resistance around there's resistance around $13, so maybe you see price pullback a bit towards swing low around 1170 about there. Is there US weekly analysis tonight? There's no session tonight. The next one will be next week on 8th April. Thanks. The next one is on SMCI. Okay, SMCI, I think some signs of weakness actually. Recently, we are seeing lower highs being created, lower lows as well. And then price actually there was a breakdown below the support of this 1030 level and subsequently a retest. I'm expecting either sideways or down for SMCI for the near term. Looks to be trading in this downtrend channel currently. Okay, then the next one is on 9901, New Oriental Education Technology, yeah, I guess. Okay, looks to be some range bound for now, with another retest of this. Currently at a support level around 68, so maybe we see some rebound. Okay, next one is on AMD. Okay, AMD, some short-term weakness, I would expect some short-term weakness because broken down this blue color uptrend support line. So a second thing, we're seeing this pullback over here. Then it's just sideways around the previous resistance at 178. So I think for now it's also finding resistance from the 5 and 10-day moving average, which are in blue and red. So I think for now, we're likely to see some sideways consolidation again towards the support 172, 173 about there. Okay, then for Tesla, Tesla, I would think maybe some looks like some short-term wise is a bit of a slow uptrend over here. Still seeing higher highs and higher lows. Did a retest of the prior resistance at 182. Then I think we'll probably see a higher low once it backtests this prior resistance at 173, 174 along this uptrend support line. So I think we'll just trend up gradually. Next one is on ARM. Okay, for ARM, I think some weakness actually currently. So this the retest of this prior support breakdown at 136 turn into a resistance over here. We're seeing price pull back again. So I think we'll see a retest of the supports at 121. If we can't hold, then we'll see a lower support being tested around 117 over there. Yeah, so generally still very range bound move, but I think the price actually trading a bit lower towards the lower end of the range. Okay, I think I'll just take 3 more questions in view of time. I think we are past 1. Okay, for Capital, I think it's still slowly trending upwards, still seeing recently price broke above this 730 level, as well as we see a new high above this 739. I think maybe some sideways move up before it continues to move upwards. Okay. The next question is on SIVR, Aberdeen Physical Silver Shares ETF. Yeah, for this ETF, I think currently I think looks like it's testing a resistance at 2430 again. With currently we're seeing a higher low being formed at a higher resistance area, around 2340. So I think if this holds, we might see a bullish flag being formed over here. And then if can hold this higher low, then I think it's more bullish to retest previous highs close to 25. Okay, then I think I'll do one last one on the PITO, which is the ProShares Bitcoin Strategy ETF. Okay, for this, I think I shared earlier in my ETF monthly. I think it's currently probably doing this bullish pennant consolidation over here. Then I think I'm more optimistic that it could break out and actually retest the previous swing high levels at around 35. Yeah, going ahead. I think that's all from me. Thanks. Yeah.
Okay, thank you, Zane. Thank you everyone for your time. Sorry that we still have some questions we cannot answer. We'll try to put those answers in the P3, our P3, and please look out for them. We usually have a hard cutoff at 1 p.m. So as you have time for your lunch. Thank you very much for spending time with us this week. We look forward to seeing you next week again. Thank you and have a good week ahead. Thank you. Bye.